What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today, we're talking about one of the hottest AI stocks in the entire market, Palantir Technologies, ticker symbol PLTR. This stock has been an absolute monster over the last year, and even after a recent pullback, investors continue asking the same question. Is Palantir still a buy, or has the AI trade finally gotten ahead of itself? Let's start with the numbers. Palantir recently reported first quarter revenue of approximately $1.63 billion, representing around 85% year-over-year growth. Net income jumped more than 300%, operating margins expanded, and management once again raised guidance. Those are not the numbers of a struggling company. Those are the numbers of a company firing on all cylinders. What really stands out is that growth is no longer coming solely from government contracts. The commercial side of the business continues accelerating. More businesses are adopting Palantir's artificial intelligence platform, better known as AIP, which allows organizations to deploy AI solutions on top of their existing data infrastructure. Think of Palantir as the company helping businesses actually use artificial intelligence. While everyone talks about building models, Palantir helps customers implement those models in the real world. That's a major distinction, and one reason many analysts believe the company has developed a competitive moat. However, not everything is perfect. Shares recently dipped despite the strong earnings report. Why? Valuation. At roughly $155 per share, investors are paying a premium for future growth. Morningstar currently estimates fair value around $153, suggesting the stock is trading very close to what some analysts consider reasonable value. Looking at analyst sentiment, approximately 61% of analysts rate the stock a buy, while around 32% suggest holding. Very few analysts are outright bearish. That's generally positive, but it also means expectations are extremely high. When expectations become elevated, even good news can cause temporary pullbacks. Another factor investors should monitor is insider activity. Recent filings show some insider selling from executives and directors. Now, before anybody panics, insider selling doesn't automatically mean something is wrong. Executives sell stock for taxes, diversification, and personal financial planning all the time. The important thing is that there has not been a mass exodus of leadership. What excites me most about Palantir is the AI opportunity ahead. Multiple analysts estimate that the AI market could grow into a multi-trillion-dollar industry over the next decade. If Palantir continues becoming the operating system businesses use to deploy AI, the runway remains enormous. Let's shift over to the chart. The stock recently experienced a pullback from its highs, but appears to be finding support. Volume remains healthy, and buyers continue stepping in whenever weakness appears. The RSI has cooled from overbought territory, which is actually constructive because it gives the stock room to move higher without being excessively stretched. The MACD remains in a generally bullish structure despite recent weakness. If momentum begins turning upward again, that could signal another leg higher. Key support sits near the $145 to $150 zone. As long as that level holds, bulls remain firmly in control. On the upside, the first major level I'm watching is a retest of recent highs. If Palantir breaks through resistance and establishes a new high, momentum traders could quickly pile back into the name. Remember, institutions love companies showing both growth and profitability, and Palantir is increasingly checking both boxes. Of course, there are risks. A slowing economy could reduce enterprise spending. Increased competition from major AI providers could pressure growth. And whenever a stock runs this far this fast, volatility becomes part of the package. But when I step back and look at the entire picture, I still see a company benefiting from one of the most important technological shifts of our lifetime. Strong revenue growth, expanding margins, growing commercial adoption, government relationships, and a product ecosystem built around artificial intelligence. So the big question isn't whether Palantir is a great company. The real question is whether investors believe the company can continue growing fast enough to justify its premium valuation. Based on the current numbers, management seems confident the answer is yes. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. Don't forget to smash that like button, subscribe, and drop a comment with a stock or indicator you'd like me to cover next. This is Sat, and I'll catch y'all in the next one. Peace.